Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Gary Lipsky. Gary has been investing in real estate since 2002. During that time, he has invested in over 1,900 apartments with $30 million worth of assets under management. So thanks so much for being on the show, Gary.
Yeah, thanks for having me.
So give us a little bit about your background, both personally and professionally, before getting involved in real estate investing.
Yeah, I've always been an entrepreneur. During college, I started a restaurant delivery service. I co-produced 3 independent films in my 20s. I started a nonprofit, and I started an educational company that served 9,000 kids throughout Southern California. So, running businesses was in my blood, and I kind of learned about real estate investing, when I was looking to buy my first house when I had a kid. I wish my parents talked about that to build wealth, when I was younger, but we never had those discussions. But I'm glad I started when I did. And obviously, it took a while to really get into it, but then I started doubling down as I got older.
What was the main reason that you got into it? To build wealth, or for other reasons?
To build wealth, and when I was investing in tech stocks and whatnot, and then that bubble blew up, and then it was and there was no rhyme and reason, and it was just part lack of education, and I wanted to control my own destiny. And so that's why with real estate, I knew I could force appreciation. I controlled a lot of the things that went on, and I could hold long term. There's no outside manipulation of financials or whatnot. So I felt like this, when 90% of millionaires own real estate, I'm like, obviously they're doing something right. So I wanted to be in control of my destiny, and so I started slowly and learned as much as I can.
Yeah, awesome. Yeah, it's such a powerful wealth creator, and I think it kind of sneaks up on you a little bit with properties that I owned. I bought one property at the height of 06, which I still own now, and I was just looking back and talking to some realtors about it, brokers about it. And they're like, oh, it's probably worth this huge, this amount here. And I bought it at the top of the market. I thought I was going to be holding this thing for years if I had to. And they're like, oh, it's up this much here and stuff. And you're like, wow, it's amazing, because it's not like a perfect market where you log into your trading account and you're like, oh, this is my brokerage account, right? And we have it dramatically, it rides right off of inflation and everything like this. So it's the thing is that when there's inflation, when anything else, everything just kind of goes up, and real estate kind of rides that wave for the most part.
Yeah, it's a tremendous vehicle. I've done really well.
So tell us about how you started investing in real estate, your first investments.
So, my first investment was my single family home for my family. I was looking for a value add play. I had no money to put down. Here I was, 30, buying a $500,000 house. What the heck am I doing? But I knew if we can open up the kitchen, we converted the garage into a living space, and that created a lot of value. So, I created $150,000 of wealth in a very short period of time with no money down. And then we moved to, a nicer neighborhood, and I converted that house into a rental. And so this was over years, and I was moving slow. But, once I started, seeing how the effects of this, I read, tons of books, and, podcasts were just coming out. I started listening to those, going to some conferences, and just, learning as much as I could so that I can minimize my mistakes and, maximize my upside. And then, eventually we bought a 42 unit almost about a year and a half ago. And that was my first foray as a GP. I had invested in other people's deals, but then now we're closing on our third deal today, actually.
Nice. So what is your current company's investment criterion strategy when looking at properties and acquiring them?
Yeah, we typically focus on Phoenix and Tucson. We're not the GPs that focus all over the U.S. We want to be experts in a market. We love those markets because of population growth, job growth, rent growth. It's for us, it's easy to get to as well. I mean, that's not a huge factor, but it is a factor because we're there a lot. I don't live in that market, but I can drive there and be there in 5 hours, or we could fly and be there in an hour. Um, but yeah, we're focusing on that B and C class value add, typically 1980s or newer, so that when we go to exit, there's more buyers in that realm.
Nice.
So we're looking at 100 plus units or more.
100 plus units. Okay, those are great markets. We're part of an asset in Phoenix, and I mean, from years back, we just refinanced it, and it's crazy. That market has been blowing up. Maricopa County, I mean, it's probably one of the fastest growing counties in the United States, if I'm not mistaken. Correct?
Yeah, absolutely. We bought a deal a little over a year ago with a reversion cap of 5.75, and now cap rates there are closer to 4. So yeah, I mean it just keeps getting more and more compressed. I mean it is super competitive. There's a lot of buyers out there, so it's great when you want to sell. It's not great when you want to buy.
Right, but you guys have that. If you have that many units and you're part with strategic partners there, that's your competitive advantage of able to source those units. Because I mean, it must be when I speak to people from the West Coast, and it's like it must be 75% of the time Arizona comes up, right? Where do you want to invest? You know what I mean? And it's like it's Arizona's in that list, right? Of wherever it is, Arizona, whether it's Tucson, whether it's Phoenix, all these different places, and it's great. I mean, it's great that you're in there and that you have the teams in place to be able to scale. So
Yeah, we have great relationships with all the brokers, and we have a third property management company that we really like, and we have a system down, and so yeah, we could see a property, start plan our business our business plan before we take over, and then as soon as we take over, we're off and rocking.
So you co-host a podcast and you wrote a book about asset management, which is fantastic because, like, I feel as you were saying, the project management, so property management, and asset management, I feel are like the most important pieces to the real estate investing puzzle. And why do you consider asset management to be so important for investments that you have?
Yeah, it's you're managing the asset. Just because you have a property and a third property management company running it, they manage, it could be as little as 10 properties to hundreds of properties. So you've got to make sure you're managing your store, and you got to be able to push them and analyze all the data, because they're not going to analyze it the way you do. So we break down every task, so we could see where the bottlenecks are, and if we can improve every little piece over time, that's going to turn up a huge value to our property. So it's funny, when we start off, they've never looked at the data the way we have before, but they get into it, and they really rise to the occasion, and understand the things that we're trying to achieve pretty quickly.
So what KPIs do you track, and do you suggest other investors to track in their businesses?
Yeah, there's so many KPIs. Obviously, you start with NOI, but occupancy, pre-lease. What we do also is break down tasks. So for leasing, we look at leads, appointments, showings, applications, and leasing. So you break down each task, and you want to see if you've got 50 leads and only 10 appointments. So what's happening there? Are we responding to their emails or phone calls right away? We'll do secret shopper reports to see if they're communicating really well and selling the units. And all the way down the part, if there's tons of applications but not enough leases, where's the problem there? Are we overselling? Are we not making sure that they are capable of renting it beforehand? Every aspect you want to break down. We look at renewal retention. That's a big one, because if people aren't renewing, then your community isn't very strong, and so you need to have better community events. Is there are there a few tenants on the property that are pushing people out? So there's a lot behind that renewal retention that's really important, because if you have a high um, if you have a low renewal retention, that costs a lot of money,
Yes.
because you have to do unit turns and whatnot. So that's a really important one that I don't hear a lot of people talking about. You also want to look at projected occupancy rate 60 days down the road. So do you have a lot of renewals coming up, and are those renewals evened out throughout the year? Um, are you aggressive enough on reaching out to people that are up for renewal 2-3 months down the road, so you can plan in advance? You want to look at lease units available, because you can adjust the rents. It's not just, well, I want to raise rents 25 on all the different units, or reduce rents $25 for all the units. If you're not leasing, you want to see which units are performing better than others, and what do you need to tweak to maximize that the leasability for all the different units.
Yeah, for sure. A couple things to highlight there. The staggering the leases when you're doing the value add is extremely important. So it's very important that you have that. So when you start going through and renovating these units, that you don't have 20% of your units that are now having to be renovated and are offline. The other thing too, you said about the turnover, it's extremely important. The turnover is one of the most expensive costs when operating in multifamily, I feel. And I mean, it's something that, like you said, just if you can minimize that just by a week here, or a few days here or something like this, I mean, especially in these larger complexes, the what happens to your NOI is really a dramatic effect. It's crazy.
Yeah, if you're really on your KPIs, and reducing all the downtime, and maximizing your occupancy, I mean, just a little bit has a huge value to your property when you go to sell it. So that's what real asset management is what, pulling all the different levers, and tweaking it so you can maximize it. And it could mean $1 million, $2 million, $3 million of value, which is huge.
Right. Right. And that's what you want to find when you're acquiring a property, something that's been mismanaged, and that you can come in there and kind of clean up, and tools and systems. So I want to talk about that. Tools and systems that you normally use for your business and you advise other investors to use. What do you suggest?
Yeah, well, we have this Excel spreadsheet that is for the weekly report for our manager. That's really involved, and it's a Google sheet. So they'll give us the link every week, and we'll go check it, and it's really detailed and customized to our needs. Something that they haven't done previously, but that's really effective. It gives us all the data, where all the leads are coming from, and this way we could see, do we want to stop advertising on this place, or double down on another thing? And it just gives breakdown of all the information. We use RealPage, and it's linked to Yardi. So we get that's through all, we create all of our KPIs, and it's pretty reasonable. I forget I think it's maybe $12 a unit, and maybe 5,000 setup. And I don't know, maybe that was a special that we got, but it's, for all things considered, for all that data, it's well worth it if you're going to be in this business for the long haul. Those are the two key things that I definitely recommend. And just tracking every conversation. We just track everything so that there is accountability. It's not a gotcha, but everyone can see what their tasks are, when is it due, and they can view that Google sheet whenever they want. And it's a good reminder for us to follow up and make sure that we're on track, because you've got to. It's so easy to get off track, and so you want all that information available for everyone to see.
It's also easy to pinpoint where the issue is, if it's your on-site manager, if it's something with your property management company itself. And then you can kind of go in there and be like, listen, the person that you put in this office is not, you know what I mean? We've got to, and you do it now, because the problem is with real estate is it's not such a fast moving business that that problem manager might not come out to months down the road. And you figure it out and you're like, now it's blatant. And if you can pick up on that faster, obviously all those people that you're now avoiding missing out on renewals or renting in the first place can now be rectified somehow. So
yeah, absolutely.
So how has asset management for you changed during COVID-19 in your company?
So we're pretty much back to normal now. But in the beginning, tons of Zoom calls, pictures, because we couldn't get out to the property as often as we wanted to. So obviously we're relying on tech a lot more, and that will continue. But now we're back to visiting our properties as much as we've had in the past, which is every couple weeks. Um, Obviously, you couldn't do due diligence, and I'm not sure you would consider that asset management, but that kind of was restricted a little bit in COVID. But right now, everything is pretty much um, back to normal. Lease activity has really picked up of late as well, which is nice to see. Um, so yeah.
Yeah. You guys had pretty good retention, I would imagine, during COVID.
Yeah, we had good retention. And for those that who we didn't want that weren't paying rent, you kind of incentivize them to leave so we can get a good tenant in there. But yeah, there wasn't very many as many leases, and there wasn't many people leaving as well. But now we're seeing some turnover, some really good activity.
Yeah, I think people are getting on with their life and they're starting to move and doing what they kind of put off for 8 months or so.
Yeah.
So what do you see for multifamily real estate in 2021?
A lot of people when COVID started were talking about this wave of foreclosures. It's a tremendous buying opportunity, but as well, cap rates compressed. You've got the interest rate, COVID discount. I just don't see a lot of foreclosures coming down the pipeline. But it's people need a place to put their money, and it's very competitive. Not only from the U.S., but there's tons of foreign money is coming in investing in multifamily. So I see business as usual, tight markets, trying to you're trying to buy properties, and it's going to be super competitive. But there in every market, in every different asset class, there are opportunities. It's how do to take advantage of those opportunities.
Yeah, for sure. I don't think on our commercial multifamily, what we're looking at for you and I, there's going to be much of a shakeup with this flood of foreclosures, because you always have to go back and tell people that agency debt loans, less than 1% of them defaulted in '08. So it's the thing is that people have high collections coming through. It's not going to waver the price at all. The other thing too is there might be a shakeup in real estate, maybe on the single family, with when forbearances and moratoriums, people moving in with other people and people moving home, stuff like that. But there's going to be even more of a demand, I think, for multifamily. And we haven't had the number of units that are required to satisfy the population in years. So it's something that for properties that we're buying, there's going to be huge demand for those in years to come. So I don't see, when people are doing that, I don't see, like you were saying, that there's going to be a pullback in pricing on the larger commercial multifamily.
Yeah, I wish, but I don't see it happening.
So you coach a number of investors. What mistakes do you commonly see real estate investors make?
So, investors want to invest with people they know, like, and trust. But, one of the common mistakes is how well they know that person. A lot of people don't do background checks. Just because they're on a, have a podcast or hold a meetup or whatever it is, doesn't mean they're an expert. Even, I know a lot of people say, oh, they reach out to me, you're killing it. And I'm like, well, I haven't had a deal in a year. I'm not really killing it. You see me on social media, but I'd love to have closed 4 properties. It just didn't make sense for me, So I think a lot of people need to do more research on their GP. What is their experience? Have they run businesses before? Look at some certain numbers on their underwriting, because every deal looks good on paper. What's their reversion cap rate? What's the population growth? What's their economic occupancy? And new investors typically don't, they don't know how to dive into that. And so I recommend them getting involved in investor groups, and so that you could share information and underwriting. And so everyone brings a little bit of different knowledge, and they can really underwrite the deal, more effectively.
Yeah, that's a great idea to do that. I see that a lot, where you have people that just because someone's closed a deal or they said there's done, and there's, with the amount of buzz around syndication now, you don't know what person's position was in acquiring that. I mean, for us, we've done one deal this year in 2020, and it was something where it was next to other properties that we had, so we knew exactly how that was operating. So it was a safe play for us and our investors to go in and invest there. And for 2021, you always want to do more deals and stuff like that. But if it doesn't meet a criteria to effectively handle our strategy, then you can't go in with it. I mean, that's where you're going to have problems with not obtaining, reaching any of the goals and returns that you've set for your investors.
Yeah, we had lofty goals this year, and we're taking down this one deal. That's it. And we do this full time, but it is what it is. We're not going to chase a deal that doesn't make sense. So
yeah, that's the other thing too, is you have people that aren't just living off of acquisition fees, which is something I always worry about. And people are doing deals, and you're like, is that really a good deal? Is that really a great market? I wouldn't want to invest there. And it's like kind of a thing where it's just, or you have to also feel out your operators and the sponsorship team and see, what, like you said, their experience and what they're really trying to do with the property that they're buying. What do you think are the main factors that have contributed to your success, Gary?
Well, definitely consistency. Grinding it out every single day over a long period of time. Never stop learning. Every day I learn something new from someone else. So I appreciate our community, and do what I say I'm going to do. And then the last thing is never overpromise. Never overpromise, because a lot of people are overselling their deals or whatnot. And I educate them here. This is what we're doing, but if you want in, but I'm not going to say this is the greatest deal of all time. These are the facts. These are the numbers. If you want in, we'd love to have you. If not, then so be it.
The other thing I don't see people do sometimes is they don't communicate to their investors about the first 6 months or 9 months of a project. Where, listen, it takes 90 days or 45 days for me to figure out who's in this property if it's really badly mismanaged, and then all this kind of stuff. I mean, it's a 6-month initial stabilization period where you're getting vendors in, vendors out that were from the previous owners and all this stuff. And I think people say, oh, it's going to be great from day one. Well, it's going to be cash flowing, but it's not going to be where we want it to be. That's going to be the end of the first year and second year and on. And they don't say that. And that's another thing too, that's kind of a red flag when I'm looking at deals, because I invest passively and obviously as a general partner. But so how can listeners learn more about you and your business, Gary?
Yeah, our website, aptcapitalgroup.com. I'm on social media. Definitely reach out, connect, and love to talk real estate with any of you guys.
Okay, that sounds great. Well, thank you so much for coming on today, Gary. I'll put all the links into the show notes. And we'll talk to you soon. Have a great 2021 and great with your new deal that you're closing today.
Thanks for having me on. I really appreciate it.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.